We've had a slew of earnings come through over in Zimbabwe, but hardly any impact on the markets itself. It seems that right now we've got markets activity reflecting what has been a tight liquidity squeeze.
Hello? Yes, it looks like this market has gotten into some fatigue stage where earnings results are hardly impacting on stock prices. We've seen significant earnings from both banking stocks and other sectors, but they've just failed to move the market. I think we attribute that to tight liquidity situations that continue to constrain markets, the markets, and as such, we're now seeing a situation where most stocks trading at very low and undemanding price earnings multiples.
Yep. What has been stealing attention when it comes to company news, though, is news out of the ICO AGM. We had the company holding its first AGM last week, where management hinted that the company is currently undertaking a series of transactions that will result in all of its units being adequately capitalized through a possible demerger of the group. Run us through a market reaction to that news, because that share price, it seems, saw quite a jump in yesterday's session from the data that we've received on this end.
Yes, I think the response from the market has been quite positive. The AGM was held on Thursday last week. Friday they issued a cautionary, and buying was quite firm yesterday. The price jumped from 8.5 cents on Friday to 10 cents yesterday, which is a 17.65% increase in the price. I think the sentiment there is that the market thinks if these SBUs from ICO are individually attended to and the debt issue arrested, there is a good case for separate listings which would unlock shareholder value.
Where we've got investors responding positively to that news, they haven't been too positive to bank earnings that have come through, despite those being pretty impressive. And it seems that there's a lot of worry about recapitalization of that industry and that sector as a whole. A lot of the investors skeptical about many of these banks being able to meet capital requirements that have been laid out for them.
Yes, I think the requirement for bank recapitalization is made investors a lot more forward-looking as far as the financial services sector is concerned. So you now see a situation where what has happened historically, good earnings, not translating into price increases, as investors look at the prospects and the ability of the companies to meet the new RBZ capital requirements. Already we are seeing, providers of lines of credit wanting to see banks' recapitalization plans before they renew their credit lines. You see, investors questioning, would this bank still be in existence when it's required to have a minimum capitalization of 100 million in the next 2 years? But I think, quite frankly, what this has done is it has brought a dark cloud right across the sector, but there are some opportunities notwithstanding. For instance, you would notice CBZ is way ahead of the 100 million equity capitalization levels, but despite throwing down 2.92 cents in the half year, which probably gives them a forward PE at these levels of under 2 cents, the stock is still languishing at very low PE multiples.